morning. My name is Pascal Hamelin, President and CEO of Abcourt Mines. Abcourt Mines is a gold development company, near-term producer in Quebec. We 100% own the Sleeping Giant mine, and second half of 2025, we're going to start pouring gold in that mine.
That always sounds good in a high-priced gold environment. Pascal, good to see you again, sir. I appreciate you coming on. Look, producers getting rewarded in markets like this, and I'm going to talk to you about the process that you've got to deliver between now and that point in time. But just remind us where you started. There's like 3 years ago or 3.5 years ago, you came into a company which looked like what? And what did you have to do to get to where you are today?
Abcourt Mines was a gold producer 3 years ago, but it was losing money with the elder mine, mining the elder mine and trucking the material 200 kilometers to the Sleeping Giant mill. The elder mine was a low-grade deposit, 3.5 gram, and with the trucking and the lack of development, the lack of exploration ahead of that mine, we were not mining the proper tonnage, the proper ounces per month. So the G&A was killing the mine, the elder mine. So 3 years ago, I came in. The elder mine was losing money, shut it down. The Sleeping Giant is a high-grade deposit. It just needed to be advanced on the geology and engineering. So we did that. It took us 2 years to do the engineering, the geology, the engineering. We began drilling in the fall of 2023, underground drilling to increase the confidence and the quality of the resource. We've been doing that since. In the fall of 2024, we did the engineering in the summer 2023, confirmed the financial potential of the Sleeping Giant mine restart. We financed it, to progress the exploration, do the underground prep. We did a lot of exploration, a lot of rehabs underground in the last year. And in the fall 2024, with the rising gold price, our financial model kept looking better and better. So we entered into a confidential agreement with Nebari. We did all the technical work that was required by the lender to satisfy his conditions. And we entered into an LOI in April 2025. So now we're completing the due diligence, and once we're complete the financing, we're going to start the development towards commercial production.
Okay, and I promise I'll come on to the Nebari secured loan details in a second. I'm interested in that, but can you remind us in terms of the resource? What are you looking at in terms of size, grade, etc.?
In resource, we got about half and half indicated and inferred. 200,000 200,000 ounces of indicated resource at 8 grams. Inferred about the same, 200,000 at 8 gram as well, with a lot of upside potential, a lot of, to the east and at depth. Historically, Sleeping Giant was mined near surface, close to the shaft. So everything east and at depth is untouched and very little drilling done. So we did some exploration drilling this winter just to validate our model that there's potential at depth to the east, and we confirmed it. So now we're back from exploration to definition drilling, and that's what we're doing for the next. That's what we'll be doing for the next 2 years, increasing the resource, and our goal is to get to 1 million ounces on the ground.
Right, so 8 grams sounds very, very attractive, and anything over 4 grams underground is good enough for me, quite frankly, in terms of making margin, especially at today's prices. But can you sort of describe the process that you're going to have to go through? You talk about the ability to maybe aiming for 1 million ounces, the ability to kind of get after this at depth, etc. But that's going to require money. We're about to talk about a senior secured debt versus equity at the moment. So how do you envisage that playing out?
Yeah, so We're going to start producing second half of 2025, or in the coming year. We're planning over 10,000 ounces for the first year. It looks small, but it's a single asset. We're a small company, not much G&A, so 10,000 ounces will get us going. We're going to do definition drilling underground to increase the life of mine. Right now, in our life of mine, we've got 6 years at 30,000 ounces a year, a little bit over 180,000 ounces. The margins are excellent. Like our all-in cost is $1,400 US. So you're looking at close to $2,600 per ounce's margin. So with those margins, our goal is to increase the number of drill rigs underground, increase the life of mine, and then develop a depth to the east. And then once we have a solid bank account, then we can look at maximizing the feed in the mill. Because this life of mine at 30,000 ounces a year, the mill's used at 40%. So there's room for expansion. So, but before expanding production at Sleeping Giant, we're going to extend the life of mine.
Right. Okay, so there's not a kind of big
extend life of mine first.
Okay, so there's not. I think what we're saying is there's not a big kind of capex commitment in terms of being able to do that. You've got what you need. This is efficient OPEX expenditure, and through the drill bit expand the resource. That I'm just trying to understand the model entirely. So that probably explains why you've gone for a senior secured loan from Nebari instead of going out and tapping the markets, because you're sitting at what 40 million market cap ish. Share price kind of moving sideways. People waiting for you to get into production. So the idea is to what, pay off that debt as soon as you can, and then do the expansion, or what are the terms?
Actually, the terms is Nebari don't want us to pay the debt too fast. They want to collect interest. So 3-year terms. So we're going to pay. There's no problem paying that debt for our shareholders. There's no worry on that side. Nebari is a good partner. Over 42 deals done recently, Nebari, and none, like I think one or two projects went into difficulties with the lender. So the other 40 projects, it was a success. So Nebari is very diligent on their end, making sure that we've got everything in place to be successful. They are a partner, not someone that wants to take the car keys.
Okay, so no, we know them. They're and I know some of the projects that they're funded as well. They're good people. They're mining people. So again, talk about the debt. So there's 8 million secured debt, and then there's some sort of talk of like equity contingency or subordinated debt.
Yeah.
What would that be?
Yeah, we're looking at different. We already closed 2 tranches of the private placement. There is about 2.3 million left to close on the equity. We're also looking at subordinate debt or subordinate gold loan, anything that will reduce the risk for the project. Nebari is 8 million US. In CAD, it's 11, and it's about the amount we need to start the project. It's all pre-production operating costs. There's very little capex to lift and the tailings. And the escapeway, the second egress for the underground development. Those are the 2 significant items, and the sleep camp.
Okay, and can I just finish off on the Nebari thing? What have you met all the terms necessary to draw down that 8 million, or was that contingent on this 2.3 million of equity?
It's contingent, but it's coming along very well. There's some forward-looking statement I got to make here. It's people are waiting for probably the due diligence report stating that everything is good. It's going to come together.
Okay, yeah, and that's going to be done by the end of May, right?
Yeah. It's I would say it's pretty well. It's not done until the money is in the account, but
yeah,
it's coming along very good.
Okay. Just in terms of let's get through the kind of use of the proceeds on that debt facility and the equity raise. You mentioned some of those things in terms of maybe kind of run down priority order and allocation of that capital. Sorry.
Yeah, it's the tailings upgrade in the tailings. We're good until the fall 2026, but you got to do work in the summer 2025 to be ready for 2026. Of course, tailings you cannot do any work in the winter. So tailings, sleep camp to attract workers regionally, not just the nearest town. The underground development is a large portion, and I say development and rehabilitation because there's a lot of existing galleries, and the hoist motor drive.
Right.
So those are the four items.
Okay, fine. And so when you say underground development, does that include exploration drilling and resource conversion?
No. Well, the exploration drilling, we put that in the OPEX. So
okay.
We're going to do it. Like we got 3 rigs on the ground. We're going to drill throughout the next year because our goal is, while we start production, is to immediately start increasing the resource estimate towards that 10-year life of mine.
Okay, and you said the GA is low and it has been. Like you've done all of this in a very tough market for explorers, you know, from a low base, shall we say. So you've done a lot, and being able to talk the game of getting into production with the kind of margins that you said is impressive. But the G&A moving forward, what do you expect that to look like? Obviously, I guess the burn rate will increase somewhat.
Not very much. Like the G&A, like we're based here in Quebec. We're very focused. I'm not looking at assets outside of this jurisdiction. I'm an expert in Quebec. I don't know anything about British Columbia. So I'll stay away from there, and even less Mexico and Nevada. So Quebec is my field, so I'm going to stick here. The G&A, of course, we're going to do some roadshow. You know, we're going to go, you know, promote the company, make sure people know us. You know that they're aware that we're starting production. We're going to have quarterly results in September. So this fall is going to be critical to make sure that people know our story, that we're ramping up production. But as far as financing goes, it's going to be too late for them.
Okay, and just on the Nabari, because obviously it's got to work for all sizes, etc. Are there any kind of gold price covenants or cash balance requirements necessary?
Cash balance. Yeah, we do. Of course,
right.
some of the detail cannot be disclosed yet, but yeah, there's cash balance required. Low payables. Always have a full year of indicated resource in the mining plan, and I have the same goal. I want to make sure we're not planning on mining inferred ounces. Inferred is a good indicator, you know, for additional drilling, but to do mining plan, it's a risk. So you need to focus on indicated resource. And of course, the indicated resource in the short term, we already have 4 stopes ready. Like in the indicated category, it's just a matter of starting the mining.
Well, what does that mean? You talk about, you know, it's immediately operational. In that sense, you talk about these sort of lateral and vertical developments already in place and work initiated, etc. But how do you expedite that kind of ramp up phase and actually move quickly into production, or will there be a ramp up?
Well, there is a ramp up. It's going to take 18 months to go from zero to 2,500 ounces a month. You know, so it's going to take a while. It's narrow vein mining, but we can start immediately. We're going to start on 2 shifts. 7 days a week, and then go to 4 shifts, 7 days a week, days and night shift. We need to hire people, and I don't want 200 persons showing up Monday morning. It's not going to work. It needs to be a gradual ramp up, but quick. because the workplace are ready. So this is why the sleep camp is essential, to attract labor from further away than because the mine site is 80 kilometers from the nearest town. Historically, people like that mine site, people were being bussed. They were being it was an hour drive from Amos to the mine site. Workers were being transported by bus. But if you want to attract labor from Winarenda, Val-d'Or, La Sarre, it's a 2-hour drive. No, like in this market, you cannot expect people to drive 2 hours in the morning and 2 hours at night. Some of my workers are doing it right now. That tells you their commitment to the success of this project. There is no sleep camp yet, and some of the workers are driving that distance every day.
Yeah, no, I know it's tough and it's competitive out there for sure. And just want to stick with this ramp up. Is what do you talked about the kind of ramp up period and getting up to 2,500 ounces per month, etc. What does that ramp up look like in terms of average head grade per quarter going forward?
Okay, the first quarter is around 7 diluted grade to the mill. That's the expected grade. The second quarter 7, 8. It's around that range all the time. Like it's
okay.
Sleeping Giant. Historically, the grade was pretty consistent. IAM Gold in 2007, they reached, I think, like 13 grams, but they were, in their head, they were phasing out. They were high grading the mine. So back in 2007, and then they walked away. So then the successor, he couldn't blend he couldn't blend the high grade stope with the low grade. So after that, they had a few years of 6 gram, but the average historically over 30 years, it's 10 grams diluted head grade to the mill. So when we say 8, that means that we of course with the high gold price environment, you lower your cutoff grade a little bit, so you get a little bit lower grade stopes that probably my predecessors were not going after. So that's why our head grade plan is around 8 grams.
And how do you, obviously the PA assumes this sort of 340 ton per day and 8 grams per ton, etc. But how do you kind of manage that? I mean, have you sort of stockpiled any development ore as a kind of buffer? At startup phase, will you be able to kind of blend and mix if things aren't kind of as modeled?
At first it's going to be a little bit difficult because we're starting. So of course the mill, we're not going to start the mill in June because we're starting to produce underground. We have silos to fill up. We have the circuit to fill up. The mill circuit is half full. We did a bulk sample in 2024, so we already have gold in the circuit. But we're going to fill the remaining of the circuit at first before we start pouring. So there will be a ramp up of a few months, probably 2 months of mining ramp up, fill all the silo, fill the ore pass. But the stopes are already defined. We see it, like the stopes are ready to go. It's just a matter of hiring the proper labor and start blasting.
Right. Okay. And on that, in terms of like key suppliers, underground contractors, explosives, etc., cyanide reagents, the usual stuff, is that all in order? You're not concerned about deliveries on that front?
No.
All good.
Yeah, it's all good. Yeah, there's for some product from the States, we have tariffs because of imports, but the majority of our supplies are coming from, it's worldwide. So I don't see, we didn't see anyway, so far this year, we haven't seen a raise in the price of the supplies yet. So I think it's, the suppliers are doing their best to outsource, try to avoid the States and import more from Europe and Asia.
Okay. And what about the mill itself in terms of that rehabilitation? Where are you with all of that at the moment?
Oh, it's ready. Like
It's
we
ready
did,
to go.
yeah,
Okay.
and we did a bulk sample last year.
Yeah.
Uh, of course, there is some investment to make in the mill, and instrumentation here and there, but it's not significant, and you can do it while you operate the mill. So there's nothing that are make or break at the mill.
Right.
Actually, we have gold in the circuit, so the mill's ready.
Okay. And permits and authorizations, etc. Everything's where
Yeah,
it needs
yeah.
to be.
We're like we have one permit. Like we're in the permitting process for the next lift in 2026. That is going to be good until 2031. We're in the fourth phase of answering question from the ministry, so we expect to have that permit this spring, so we can start working in this summer. And for phase two of our sleep camp next year, we need to increase the capacity of our septic system. So we're isolated, so we're not on any city services, so we need to have our own septic system.
Right. Okay. So I very much focused on that optimization of the process, and we'll come to the exploration bit separately under OPEX. Okay. Exactly. Okay. Fine. And
More construction permit than I call them construction permit more than environmental permit. You deal with the Ministry of Environment, of course, but it's already a mine site. You're not starting a new mine in the middle of a new place.
Okay, interesting. Well, I'm sort of stepping back and waiting to see you kind of do these things. I mean, like I say, it's been a tougher market. It's taken a while because I think from a low base. But any story I think at the moment I can talk through a logical process of getting into production is good. I think people will look at this and go, look, it's 200,000 ounces. It doesn't feel like a lot. It's 30 ramping up to in 18 months 30,000 ounces per annum. It doesn't feel like a lot. So can you talk to me about the on the kind of potential side, on the exploration side, what gives you confidence that you'll be able to find more of the same if you allocate or are able to allocate capital towards that?
Good question, Matt. What we did when I joined Abcourt is we did the 3D model of we had over 1 million meters of drill information that was stored in paper section at first, in the 80s, 90s they moved to AutoCAD, but there was never any no geology model on the geology software of today like Surpac or Genesis or Leapfrog. There was none of that. So when we imported but Cambior and IAMGOLD were very, very diligent on having a solid database. So all we had to do is import that database into a geology software. Of course, there was, it's never 100% right. So we had to do some fixing in 2022. But then what it revealed is a lot of drill intercept, like 40 grams over half a meter, but no follow-up drilling beside it. And to call a resource inferred, you need to have 3 holes within 75 meters. So if you only have 2 holes, guess what? It's a nice intercept. So all you got to do is follow up on those targets. So the geologists have numerous targets. They asked me, where do you want us to start in 2023? I said, start near the shaft. So where it's already developed. So they did that in 2023. They started where we had access already. So they identified, our geologists are pretty good. But it started with a good model. So when you see the trend of the vein, we have all the historical information, so the shape of the deposit. So you can say, okay, if I poke a hole there, it just goes from a nice intercept to inferred, and then you poke another hole, it goes from inferred to indicated. and then you can do mine planning around that.
So you're kind of looking at more kind of structural vein set based model versus a kind of lithological domain approach. I'm trying to work what other data you can lay on top to chase this, or is it just good old fashioned drilling?
Back in 20, like when we did the original resource and when we released the report in January 2023, the first recommendation add the little structural add the lithology on the geology model. So we've been doing that since 2023. We're doing that as well as drilling, because it will provide more targets to the geologists. So we have an independent firm doing that for us right now. We've got 2 geologists full time from that independent firm, and they're working with my geologist to build a model.
Okay, so I guess somewhere in there's all this kind of geostatistical techniques in terms of being able to kind of manage grade estimation, because obviously, the risk around grade estimation, things like capping, conditional simulation, etc. You've done all of this. You don't need to look at this.
Yeah,
okay.
And when the Barry came in, guess what we did? We revisited the capping model, like the geostatistics. Actually, our capping is 90 grams per ton, and it was throughout the entire deposit. We did some tests. What if we decrease the capping to 60 grams or increase it to 120? There was very little variation on the total metal. So we were actually, I was a little bit surprised by that, but that confirms that 90 gram is probably right. And also Cambior, like, this is not new. Cambior was using that for 20 years also.
Okay. This one I'm so interested in, like the kind of mill performance, right? Because you talked about, obviously you look to, you've done the rehabilitation, you upgrade various aspects of it, but you've got things like variable mineralogy between zones. So like you kind of got this kind of silica pyrite versus hematite bands, etc. That's got to affect mill performance or reagent consumption, etc. So how do you manage all of that in terms of the data and the controls that you're putting in place?
The first thing we do is we add cyanide right in the grinding circuit. So because we don't have nuggets, so it's disseminated gold in the vein. And the particularity with Sleeping Giant is, there's many veins, but they all look alike. And it's not quartz, it's sphalerite. Sphalerite, the gold is associated with sphalerite and chalcopyrite. So it does affect the cyanide consumption. But on tank number 3, we have 7 leach tank. The carbon is added on tank number 4, and then we can adjust. We see it right away on tank number 2 or tank number 3 when there's not enough cyanide, and if there's never too much cyanide, but if you have too much, well, you can save on cyanide because of costing. But the key is to make sure that you react before tank number 4. When it hits the carbon.
Okay.
So we can add cyanide at different location in the circuit.
Okay. And what are the kind of options available to you to kind of increase head grade or reduce processing costs, etc. in terms of, I don't know, integrating ore sourcing or gravity recovery, etc. Again, talk me through what you're looking at or thinking about there.
The recovery is pretty well constant. Very little fluctuation historically. What you're looking at steady grade to the tailings of 0.18 on the solid side. So that's our goal. The key for Sleeping Giant and many mines in the ABTB camp is the grinding circuit. So you got to keep an eye on your cyclone to make sure that you got the right size of the distribution of your pulp. So you need to be at 75 microns. So you got to watch your cyclone, make sure that they're tuned so you're not sending oversized material to your leach circuit. So that's what you're going to monitor. It's the grinding. If you keep an eye on your grinding, you're going to be successful.
Right. Okay.
Because the cyanide will do the job.
And talk to me about what's happening in the kind of Abitibi region. We've seen a whole bunch of M&A happening out there. We've seen mergers and of equals, etc. How do you think the kind of region has been looked at by some of the mid tiers or majors? And how does that kind of affect your behavior, or even maybe some of the opportunities available to you with, I don't know, like toll milling agreements if you've got capacity at the moment?
Yeah, good question. The majors are looking at filling their mill. So in our camp we have 4 producers. We have IAM Gold, of course, Agnico, Eldorado Gold, and Wesdome, and ECLA at Berardi. So 5. Sorry, ECLA. so we got 5. So they're all looking at filling their mill, except Berardi. The other 4 are done in the Cadillac Fault. So they're competing between them so example, Radisson signed an MOU with IAM Gold. So if Radisson develop the projects towards a reserve and they do the pre-fees, I think that's what their goal is. They source the mill, like they already secured the mill. The other mill, they're full. So our strategy is to talk to, and the majors are not interested in a 30,000 ounces a year deposit or 50,000. They're not interested in those. They're looking for the 100,000, the 200,000. Us, I'm okay with 30,000 because the margins are excellent. So of course you're going to pick your grade. A 30,000 ounces a year at 3 grams, it's not attractive. Abcourt lived it with the Elder mine. Elder was 3.5 grams, hauled over 200 kilometers. It was too risky for that grade to haul over 200K. But 5 grams and above to haul 100 kilometers, you can, especially in this price environment, you can make pretty good money. So that's why we applied for toll milling. We applied for that permit. It's not a rush for us because the other deposit, like our colleagues in the industry, they got to do their work. They got to bring the deposit to a reserve category and go through the permitting for the extraction. But at least I'm going to have the milling permit in place already. So, and the North Range where we are, there's no mill. Like there's Berardi to the west, but by road we're beside each other. But you got to go down south to come back north. Same thing for Bachelor Mine. Bachelor Mine is 200K to the east from us, but you got to go almost down to Val-d'Or to come back up to Sleeping Giant.
And what about, like, you're sitting on a decent land package there, and you got to stay focused. You got to focus on the money, and you've explained the plan well today. But you've kind of got some sort of non-core assets in there. Aldemag with copper and Abcourt Barvu, saying. Do you need to sort of tidy up your balance sheets somewhat and the portfolio as well?
Well, we're trying to monetize some of them, of course, but there's no rush. Like we have a lot of exploration credit on them, so we don't need to take the first offer. We just have to be patient and wait for the proper offer. In this market, there's a lot of assets that are cheap. So people will go after those assets, but us, we can develop them. We're going to have Sleeping Giant. So in 5 years, 10 years, with Sleeping Giant, we can start adding a second deposit to our, further reduce the risk. Because at first, Sleeping Giant, we're going to be a single asset producer. So in order to get further re-rating on the stock market, we're going to have to get a second mine in production. So, and we own them, so we're not going to have to buy them.
What do you mean by that? You own that? You feel that somewhere in your portfolio is something that?
Oh yeah. Like we started, like, the focus was on Sleeping Giant since 2022, but because we have 500 square kilometer of asset, a VP Exploration joined us in 2023, and I told Robert, I said, see how we can monetize some of these assets. Well, he did so good of a job that now we have an asset that, I could see in 5-7 years being a producer, that Florida Cartwright sector, And even if we went into a JV with someone to help accelerate the project, Sleeping Giant is still a natural fit because Florida Cartwright doesn't have a mill, doesn't have anything. It's greenfield.
And that's sort of yielding like what, 3.5 grams per ton, that sort of level.
Yeah, 3.5 grams on surface, open pit. That can be pretty profitable.
Well, okay. Well, let's come back on that one once you start doing more drilling.
Yes,
for sure.
Yes. But there's potential out there. So we have projects in the pipeline that eventually could feed the Sleeping Giant mill. But at first, I need to reassure the investor, our focus will be to, I would say 80% of the free cash flow will go on Sleeping Giant to make sure that we're extending the life of mine. And eventually, once we have a 10-year life of mine with good margin, then you can look at expanding the production at Sleeping Giant to try to fill the mill. Historically, that mill was never full, never operated at full capacity. So you need to do the geology, do the development, and eventually, you could start ramping up. But at first, extend the life of mine.